Okay, hello everybody. Let's see. Hello. Okay, guys, if y'all can hear me, okay, I know there's a little bit of a lag, so let's just give it time for people to join us. I'm also just checking if the link is working in the Telegram. Okay, so guys, if you can hear me, can you just type in the comments the country that you're tuning in from? Okay, type in the country that you are tuning in from while I check whether this Facebook Live is working. Okay, okay, type in the country that you're tuning in from. Hello, hi Eugene, hi Andy, okay, from Malaysia. Okay, guys, continue to type in, all right? I'm just going to make sure that everyone can... Okay, Roxanne says Malaysia. Anyone else, guys? Danny says Malaysia. Well, okay, a lot of people from Malaysia. Hello, guys. Okay, now before we begin, can you help by liking and sharing this video so that more people can join in the learning? Okay, there's a lot of frenzy, a lot of things that are happening in the market right now, and we do not want panic buying, panic selling, or being very reactive to the market. So what's very important is that everybody understand what has caused the recent sell-off, right? Understand what is the potential market direction from here, and also very importantly, we want to be able to capture market opportunities. Okay, so once you have helped to like and share this post, can you type LNS? Long time no see. Yeah, exactly right. I've been very busy. Okay, good. Guys, can you type LNS when you have liked and shared, and then we can start. Okay, there's a lot to cover today, and I don't want to hold y'all up by too much. Okay, so help to like and share, and then we can start. So once you have helped to like and share, you can type LNS. Okay, you can type LNS. And those of you who have just joined in this conversation, once again, welcome to market updates. Recently, there's volatility in the market. Recently, there is a correction in the market, right? We want to deep dive into the reasons for this sell-off. We want to ask, right, is a deeper correction coming? Are we still in a bull run? Where are the opportunities? Okay, and because it's very important for people not to be reacting or overly reacting to the market, but rather really having a strategy, focusing on their strategy, capturing market opportunities. Can you help to like and share? Okay, great, Roxanne. Roxanne says LNS. Anyone else? Can you help to like and share before we start? Okay, I will give y'all 1 more minute, 2 more minutes to like and share while we wait for people to enter, because you guys are going to get tremendous learning and value out of this. Okay, yeah. Okay, once you have helped to like and share, also type in the country that you're tuning in from. So yeah, Andy says Malaysia, Roxanne says Malaysia, Danny says Malaysia. Okay, good. Anyone else? Where are you guys tuning in from? Where are you guys tuning in from? Let me just get some water while we warm everybody up. Okay, I know that it is Wednesday evening. Okay, good. Hello, John, Jones, Kiwi, Terry, right? Okay, guys, so help by liking and sharing. Hi, Charlene. Hello. Hello. Wow, Gabriel from Afghanistan. Amazing. John says, hi, Felicia. Been a while. Yes, exactly. Okay, guys. So, 1 more minute. Okay, 1 more minute. Firstly, help to like and share so that Facebook algorithm can push this up and the learning can go to more people. All right, there's a lot of time preparation that has been put behind the scenes to share with you guys exactly what's going on in the market, how to position ourselves, how to capture market opportunity. The last thing we want is for people to start panic selling, or firing in the market when really, if the market opportunity is still not there. So we want as many people to come on board to enjoy the learning, okay, to invest safely, to invest profitably, and to really gain consistently and sustainably, right? Because the last thing we want to do, fireworks boom to the sky, and then what happened in 2022, there was a bloodbath, right? So we do not want that to happen. Okay, hello. Louis, is it? Hi. Okay, good. So once again, help to like and share. Okay, help to like and share, and then let me just share my screen right now. Okay, let me just share my screen. There's a little bit of a lag. Okay, good. Once you guys can see, great. Okay, can you guys see my screen? If you can see my screen, type screen, okay? There's a little bit of a lag, so I'm not sure if y'all are actually seeing my screen. If you guys can see my screen, type screen. Okay, guys, if y'all can see my screen, type screen. Are you actually seeing my screen? Yeah. Stop screen. Okay, guys, if y'all can see my screen, type screen. Just give me a little bit. Okay, I think you guys should be able to. Okay, very good. Yeah, now this is the correct view. Okay, so once again, more people are tuning in, welcome to market updates. Okay, three things that we want to answer, three questions that we want to answer today. Number one, what was happening? What happened in the sell-off, right? Number two, is a deeper correction coming, or are we still in a bull run? Number three, very importantly, where are the opportunities and how do you capture these opportunities? Okay, so let's go. Now what has happened, right? From July to August, can you imagine the S&P fell by 13%, and then now, right, it's slowly recovering. Let me ask you guys, investors are really asking, whether this recent setback of the market is a temporary blip, right, after a year of very solid returns, or is it a signal of what could represent a more serious economic challenge, right, that will have a more significant market impact moving forward? So just type, how do you guys feel right now? Okay, do you feel A, at peace, very happy? B, are you crying a little bit? C, are you very anxious? D, are you sleeping soundly? A, B, C, or D, guys? How many of you are feeling A, B, C, or D? Hello, Che, David. Good. Okay, so type. Are you all feeling A, B, C, or D? Happy, waiting for opportunities. Anyone else? Okay, Andy says C. Thank you for being honest. All right, John says waiting for opportunities. Andy says C. Okay, thank you for being honest. David says sleeping good. Danny says, oh, a bit anxious. Okay, thanks for being honest. Now, guys, there are quite many of you that are watching this video right now. How are you feeling? Okay, all right. Well, I see some of you quite confident. A and A. Now, you want to be, even if you are A, you have to ask yourself, okay, how are you going to take market opportunity? Now, what does the fear greed index show us, right? The fear greed index show us that actually the past 1 week, the market has been extremely fearful, right? People are really wondering, okay, is this really just a temporary correction? Or is this really something that is more significant? Is it a more significant downturn to come, right? Because the economy seems to be slowing down. It seems to be softening. Now, I want to remind everybody, right? Our grandfather of investing, Warren Buffett once said, be fearful when others are greedy and greedy when others are fearful. True or not? Right? True, for sure. Why? But what is the contradiction? The contradiction is that when the market is dropping, we're like, oh, what if it drops further? What if it drops further? Even if there are already good market opportunities, we are constantly second guessing ourselves. And this has to do with mindset And one of the root causes why investors are not able to action and be greedy when the market is dropping and when most of the market is fearful is because they do not have their customized portfolio strategy. Okay, that is tailored to your risk profile, that is tailored to your life stage, that is tailored to your portfolio goals and objectives, that is tailored to your strengths and weakness. Because honestly, if you have this customized portfolio strategy, you will be able to be greedy when other people are fearful. Can you type CPS? Customized portfolio strategy. Okay, if you do not have it, I will tell you how to get it. Okay, further on in this sharing today. Now, okay, so type CPS. Okay, CPS. Now, what has caused the sell-off? What has caused the sell-off? The recent 13% sell-off. Number one is an overvalued and overly concentrated market. Remember, previously I was sharing with you guys, especially those of you who are in the community, who are in my Telegram, I was sharing with you guys about the Buffett Indicator, that it really shows that it is overheated. Now, we will further cover, okay, as to the market valuation from here. But what has caused the sell-off? Obviously, there was an overvaluation. There needs to be a correction. Number two, an ongoing rotation away from the mega cap growth stocks into more of the value stocks, right? I will also talk about that further on. Number three, there was a rate hike. Okay, there is the rate hike from the Bank of Japan and the appreciation of the yen. So how does this impact, right? This really surprised investors when when the Bank of Japan tightened policies more than expected last week. Why? And how does this impact, right? So for years, traders were leveraging, right? The hedge funds, they were borrowing the relatively weak yen. They were using it to buy other assets like the Magnificent Seven, your Nvidias, right? Your mega caps, your Apple, Microsoft, Amazon, Google. And therefore, that turbocharged the US market momentum. But the trades started to unravel, right? Because all these were borrowed money, but started to unravel due to the rate hikes. And they were anticipating a rate hike. And therefore, as the yen appreciates, all these traders who were borrowing money to trade, they have been forced to exit and close their positions because dollar slumped 15% against the yen. Okay, so huge move in the currency market, and then all these people scrambling to exit the trades worsens the sense of panic in the market. Understand, guys? Understand? Okay, if you understand, can you type U in the chat? If you understand what I'm saying, type U in the chat. Okay, because I want to be interacting with you guys. All right, you guys know that this is, something that I really share with my mentees, 3 levels of learning. Number one is information consumption. Okay, you're just chewing on information, just receiving information. This doesn't do you any good. Okay, thank you, Danny, for responding. The second level of learning is really asking the so what. It's asking, do I understand? Asking the so what. What does this mean? What is the insight? Is it good? Is it bad? Is it to watch? Okay, and then the third level of learning is application. All right, okay, Danny, thanks for responding. He understands. Vincent understands. Good. Now, what else has happened, right? What else has happened? Very, very importantly is this: weaker than expected jobs data, renewed fears that the Fed left interest rates high for too long, right? We were anticipating a decline in interest rates, a softening of interest rates, but no, continue to leave it high. And it could possibly lead the door to a recession. Now, what has happened? Okay, rising unemployment rates, right? Hold on, let me just, yeah. So, rising unemployment rates. Recently, the most recent one, 4.3% unemployment. Okay, this is the highest ever since October 2021 of 4.1%. And the jobs that was expected to be created was 180K, but there was only 114K. So it was short of 60 to 70K jobs. And so unemployment rates, typically it tends to be a red flag for the economy. That's one of the very, very first red flags. Why? Because once unemployment rates move upwards, very likely in the past, okay, it tends to continue. It tends to snowball. People being unemployed leads to less spending, right? That causes firms to cut back. Why? Because revenues will start to taper, right? When overall consumers spend less, and then firms cut back, unemployment rise. So it's kind of like a vicious cycle, and this is why this time the unemployment rate is being rather high. you know, I mean, it's the highest ever since October 2021, which was still the recovery of COVID. This has really, you know, caught the attention of people. Okay, and yeah, so you can see over here, it's really a flashing red, and not only has unemployment rates gone to its highest level since October 2021, which was the recovery period of COVID, wages have also slowed down. It's very slow, okay? Plus 0.2. It's literally stagnant. You can't even cover, right, inflation. Okay, and you can see also this chart over here, the monthly changes in jobs, right? It's really the slowest in the past 12 months. So let me ask you guys, are there further headwinds in the near future? If you guys think that there are further headwinds, so there's further, you know, correction, can you type C, correction? Or if you guys think that, oh, the bull run will continue, right? Let's say 12 months from now, type B. Okay, if you think that a correction is coming, type C. If you think the bull run will continue, type B. I really want to see. Very curious. Gloria, Ryan, Eugene, Helen. Okay, guys, can you type in the chat? Do you think a further correction is coming? C, or the bull run will continue? B. Okay. Okay, Wei Xian says C. Anyone else? Wow. Okay. Kiwi. Oh no. Okay, Wei Xian says C. Junren C. Okay, Dead Cat Bounce. Danny says C. Wow. Okay, you guys not very optimistic, huh? David says bull run. Anyone else? We have quite many people here, so I want to hear, guys. Do you think that there are further headwinds ahead? If you think further correction is coming, type C, or if you think the bull run will continue, type B. Okay, guys, C or B before I share with you guys. Okay, now while you are thinking, for those of you who haven't yet responded, while you're thinking, it's very important, right? Everybody who is listening to this, remember that markets are always fluctuating, okay? And that is why you need your portfolio strategy, which I will talk more about. Because if you have your portfolio strategy, regardless of market up, market down, you will know exactly how to position yourself, how much vestings you should have, how much cash you should be holding as spare bullets, okay? What are the opportunities that are suited for you? If you don't have your portfolio strategy, I will share with you towards the end of this webinar how you can construct your customized portfolio strategy, okay? Okay, good. So Helen says C, Stephanie says B. So you can see, right? The general sentiment is that it is quite cautious, right? People are very cautious in general. Now, maybe just to paint a little bit of a upside first, okay? In this recent quarter in Q2, the S&P 500 companies that, I mean, typically in Q2, the S&P 500 companies will report a weaker net margin, okay, a weaker net margin, and this has to do with, you know, business planning, this has to do with sales, this has to do with the cycle during the year, so on and so forth. Interestingly, okay, Q2 this year, the most recent one, S&P 500 reported 12.1% profit, net profit margins, and this is higher than last year. Can you see last year was what? Last year was 11.6. Okay, so yeah, so it's I mean it's a pretty good sign. Okay, if you think about it. In fact, technology companies reported higher net margins of 25% as compared to 23% in Q2 last year. Okay, so net profits means what? It means that revenues are growing and costs are revenues are growing, but cost is not growing as much as the revenues, right? So cost is tapering, revenues are growing, which makes the business model work harder and work better. However, what's happening is that when it comes to revenues, which means top line, at the end of the day, it's the demand, right? Demand for goods and services that are being produced by these top 500 companies. Oh, sorry. And this one, maybe just to let you all know, also 78% of the companies that have reported actual EPS actually have their actual EPS above estimates. Okay, so this is on par with the past 5 years. Okay, so this is on par with the past 5 years, which is not too bad. Having said that, right, in terms of the revenues, which at the end of the day signals market demand, okay, the revenues of the S&P 500 companies is 59%. I mean, 59% reported above estimates as compared to the 5-year average of 69%. It's a 10% difference. It is quite stark, okay? And this is explained through what, right? We can see unemployment rates have increased. So unemployment rates have increased, right? People's spending power dropped, and therefore there is less spending in the market, and therefore leading to less revenues overall. Okay, so this is something indeed to be watched. Okay, but once again, in terms of the profits, 78% reported above estimates for the EPS, for the earnings per share. And this is on par with the past 5 years. Past 5 years, about 77% report above estimates. Okay. And also in terms of year-on-year revenue growth, 10 out of 11 of the industries that are represented in the S&P 500, 10 out of 11 had year-on-year revenue growth. Okay. And of course, technology led the sector. Materials sector was the only one to have reported a decline. So overall, we still see a growth, although the growth is probably less, right, than what we had expected, or a little bit slower than what we had expected. Okay, so you can see, right, today, 13th of August, 5 and 5th, 6th, so that was a week ago, right, slightly more than a week ago, this happened, right? I mean, slightly more than a week ago, this sharp drop happened, and then before that, the market was already starting to correct. Now it's going up. The question is, can investors expect to return easy gains, right, as compared to the start of this year? Because, right, you guys don't have to do anything. You are sitting on your hands. your portfolio is running, right, earlier this year. Right now, even as we speak, the markets have already rebounded a little. Overall, if we draw it out to this year, the gains for the S&P this year is still 11%. Okay, 11%. So what do you think? Do you guys think that it's getting more difficult to expect easy gains from the market, especially with all these mounting evidences that the economy is slowing? Or do you think that it's still easy to be earning money in the market? Easy or difficult? E or D? Guys, do you think that it's going to be easier or more difficult? E or D? Do you think it's going to be easier or more difficult? Type it in the chat. Easier or more difficult? Easier or more difficult, guys? Okay, Anud says, wow, okay. Anud says E for easier. Anyone else? Anyone else? Is it going to be easier or more difficult? Vincent says D for more difficult. Okay. Anyone else? Guys, anyone else? Okay, E. Rudy says easier. Very interesting, huh? Very interesting. Now, let the data speak for itself, all right? Let's see. How expensive is the current market? Now, for those of you who have been following me for a while, you guys know that there is this one indicator that I typically use, right? That even one of the most solid investors in the world today use. That one indicator that tells us how overheated or how undervalued the market is. What is the indicator? Guys, what is the indicator? Type it in the chat. What is the indicator? Okay, Rudy says E. Wei Xian says D. Rudy says Schiller. Anyone else? What is that one indicator? Okay, thanks for trying. Anup says Buffett Index. Okay. Now, indeed, okay, Warren Buffett says there is one best single measure of where market valuation stands at any given moment, and that is called the Buffett Indicator. All right. Can everybody type BI in the chat before I explain what this is? For those of you who don't already know, and for those of you who know, let me just recap. Okay, it's very important to keep reinforcing our learning. Type BI in the chat. Okay, type BI in the chat. Now, this Buffett indicator basically tells us, right, the stock market, like the capitalization of the stock market, which is like the whole worth of the stock market, right? Right now in the US as compared to GDP, okay? GDP meaning the exact and actual value of the goods and services that are produced and transacted by actual customers and clients, okay, in the market. So literally, what people are valuing the stock market is versus what the actual value is that is seen in the GDP. That is the actual monetary value of all the finished goods and services. GDP is used to estimate the size of an economy and the growth rate. Okay. Now, do you remember? Okay, so this is historically. Can you guys see? Internet bubble burst, right? This was in 2000. It was strongly overvalued. The Buffett indicator was 2.1. In April, before the correction, it crossed into this zone of strongly overvalued. Okay, before April, remember? In April, actually, I did warn my community. I said, hey, the market is overvalued. And then what happened? Ever since then, since April, we have seen my market bloop, 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 coming down. Okay, so and then of course, COVID crash, right? COVID crash, it was over here when it was in the strongly overvalued zone. So what do you guys think is the current market valuation today? Do you all think the current market valuation today, as of now, August 2024, is strongly overvalued, it's overvalued, it's fairly valued, or it's undervalued? So strongly overvalued type SO, overvalued type O, fairly valued type F, okay, undervalued type U. What do you all think? Can you all type? Can you all type? Clarence, this is a very good question. And this is exactly what I am going to be answering. Because tell me, guys, talk to me. Is the market overvalued or undervalued or significantly overvalued? Anu is saying overvalued. Chimran says overvalued. Ed says strongly overvalued. Vincent says overvalued. Anyone else? Anyone else, guys? Type it in the chat. Okay, what do you guys think is the current market valuation? What do you think is the current market valuation? Okay, David says O, Rudy says O. Now, look at this. Let me ask you, who is firing your bullets and who is being very cautious? Kit says O, Wei Xian says O. Okay, those of you who are okay, overvalue only on Magnificent 7, you sure? Andy, okay, very good though. Okay, look at this. Look at this, Ta-da. Can you see? The market right now, as of now, at this point, we are talking, it is 187 on the Buffett indicator. Fairly valued is between the range of 107 to 131. Significantly overvalued is anything more than 153, okay? During the global financial crisis, it was over here, modestly overvalued. During the COVID crash, it was here, okay? During 2022, the major correction in 2022, when we went into a little bit of a bear market, it was here, significantly overvalued. Right now, as we speak, the S&P 500 is still significantly overvalued. Okay, I'll take a pause, guys. Chew on this. How many of you are a little bit like surprised? You know, if you're surprised, can you type S? If you're surprised, like, whoa, after this correction, it's still significantly overvalued. And how many of you are learning from this? If you are learning, can you type learn? Okay, if you're learning, type learn. Now, it is extremely critical. Why? Too many investors out there are like, oh, you know, market correction. Okay, now time to bloop, 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 right? Be firing in the market without knowing that it is actually still significantly overvalued. I'm going to take a pause here. I'm going to ask a very kind favor from you guys. Okay, do a favor for all the investors out there. I'm going to take a pause right now. Can you help to boost this up on Facebook algorithm by liking and sharing this video on Facebook? Okay, by liking and sharing this video on Facebook. And for those of you who share this video, you will get the slides from today. Okay, it's very important. There's a lot of golden nuggets inside these slides today. Okay, so for those of you, once you like and share, and please put it to public so that I can see that you have shared it, I will send you the slides from today. Okay, so once you have liked and shared, you want the slides and the analysis from today, because there's still, you know, a lot more to be covered in terms of the opportunities and where the market is headed. If you want the slides from today, help to like and share. Okay, And remember, when you share, put it into public view so that I can see that you've shared and I can send you the slides. Okay, once you have liked and shared, can you all put LNS? Okay, just 1 minute, 30 seconds. All right, because I know your time is precious. 30 seconds. Once you have liked and shared, can you type LNS in the chat? Okay, because I really want everyone to be jumping on board this learning. I do not want anyone to be recklessly firing in the market or panic selling. All right, very important. Okay. Okay, everybody at LNS. All right. Thanks, Ellen. Thanks, David. Fantastic, fantastic, fantastic. I love it that, I mean, how do we build a strong community is when people are contributing, right? When people are contributing. So thanks, David. Thanks, Esther, Andy, Julia. Okay, fantastic. Chin Han, Danny, Anoop, Yo Hong. Okay, fantastic, fantastic. Thanks, guys. So once again, those of you guys, you want the slides from today, the insights from today, help to like and share, put it to public view so that I can see that you've shared and I can send you the slides, okay? Now, not only is the Buffett indicator showing that the market is significantly overvalued, look at this, okay? For those of you who are in my Telegram community, you guys know, right? And those of you who haven't joined, it's in the scroll below. Okay, you can join the Telegram community. It's very, very important to note that even from a PE perspective, it is still overvalued. So typically, past 5-year average, it lies between 18.2 to 22.3, 22.4. Right now, it is 26.7. If you think 26.7, actually it's what? 26.7, it's 30%, right? 30% more expensive than the 18.24 PE. Okay, so can you see or not why it lies between the significantly overvalued? Just want to bring us back to the ground. Okay, now how many of you actually lost some money? And there's no shame about it. Okay, many people were affected by this. How many of you actually suffered a huge dip in your portfolio during the 2022 bloodbath? Can you put the minus sign in the chat? The minus sign in the chat. Okay, put the minus sign. If you guys actually, because I know so many people who literally burned their portfolios during the 2022 bloodbath. Okay, and it's okay to be honest. Now I want to bring our feet back to the ground. Why? Because once again, if you guys go watch back my market updates at that period of time, I did one in May and June, right? I said correction is coming, right? True enough, and then October, boom, right? We were at market low. The BI, Buffett Indicator in June 2022 was 171. Okay, it's in the significantly overvalued stage, right? Strongly overvalued. And then later it corrected. It fell to 153% within the overvalued stage. S&P fell by more than 25%. Okay, so it's very, very important to note that the Buffett indicator is not just like some random indicator. Across time, it has really predicted or forecasted an impending correction. Okay, good. Now, once again, it's very important. But market goes up, market goes down. This is what it is. As an investor, you have to be able to stomach the volatility. Having said that, let me ask you, does market volatility matter as an investor? Yes or no? Does it significantly impact your investing strategy? Yes or no? Type yes or no. Does market volatility significantly impact your portfolio strategy? Yes or no? Type yes or no, guys. I really, really want to see if, let's say, you all have gotten the foundations of investing right. So the question is, does market volatility, whether market goes up, whether market goes down, significantly impact your portfolio strategy and the way you invest? Okay, Helen says yes. Anyone else? Anyone else, guys? Anoop says no. Okay, anyone else? Does market volatility significantly impact your overall strategy? Okay, now many of you are typing yes. The answer is no. No. And why is this? Now listen up, extremely important, because I don't have a slide for this, so I want you to pay attention to me. There is such a thing called customized portfolio strategy. Can everybody type CPS? Customized portfolio strategy. Okay? Customized portfolio strategy. A customized portfolio strategy basically is like the blueprint of a house, okay? It's the blueprint of a house in which, before you build a house, before you buy a house, you need that blueprint on paper telling you the layout, what is the size of the living room, how many bedrooms, how many toilets, what is the size, what is the layout, right? Only then can you start stacking your bricks and laying the cement in order to build your blueprint. If you do not have that blueprint, which is a strategy, and you start building your stacking your bricks and laying the cement, you will be building 10 toilets or 10 bedrooms, okay, instead of the 2 bedrooms and 2 toilets that you need. Having a customized portfolio strategy allows you, okay, to really position yourself in the market. You will know exactly how to take opportunity, what are the right opportunities, what are the wrong opportunities for you. So before you start stacking the bricks, laying the cement, okay? So for those of you, just mark this down, okay? Just take note of this form over here. I'm actually going to do a workshop later. I will tell you all further on, okay, how you can get your customized portfolio strategy. I'm doing a free workshop. Copy and paste this link into your browser so that you save it. I will tell you all more about it later, okay? It's free. It's completely free. If you guys want to know how to build your strategy, take advantage of it, save this form. I will tell you more about it later, okay? Now, I just want to continue with the market updates. So, we can look at the manufacturing PMI. It is a measure of the prevailing direction of economic trends in 19 manufacturing industries, okay, in the US economy. So it takes into consideration certain economic drivers like GDP, inflation, exports, utilization, capacity, okay, employment, inventory, so on and so forth. PMI that is 50% and above basically tells you that manufacturing sector is expanding, okay? It's expanding as compared to the previous months. Anything less than 50% tells you that it is declining. That means manufacturing, the goods that are being produced, being transacted, being forecasted to be transacted in the market is declining. Can you see that this month, July, it is the very first month, okay, this year that is under 50%, which means that it is forecasted to decline. Manufacturing is slowing down this month. And then there is a rolling effect. The rolling effect is that less goods are transacted further down, okay, further down the road, and then that also impacts revenues, right? So this remains the lowest reading so far this year, deterioration in business conditions, all right? And output prices have increased, meaning cost of production has increased. Cost of production has increased while the sale prices has only marginally increased, okay? Cost of production has increased due to energy cost, freight, labor, raw materials cost, all right? And all these have increased, but the sale price itself has only increased marginally. And this has also impacted revenues, okay? And then when we look at interest rates, now, very, very interesting, right? Very interestingly, this is a very simplified version, okay? But you guys are retail layman investing, so you don't really have to know all these like big terms behind it. All you need to know is that when the Fed increased interest rates in the past, they were trying to curb inflation, right? They were trying to slow down the economy. When you increase inflation, cost of borrowing also increases. So people take less debt and then companies expand at a slower rate because now they take less debt to be investing in their expansion. What has happened, right? So over here you can see, right? The past year, the interest rates is at really, really all-time highs, as we compare in the past 2 decades. But what has happened is that because interest rates have been at all-time highs, now economy has shrunk back. Inflation has come back to a 2% target, has come back to close to the 2% target. Is this good or bad, guys? Good sign or bad sign? Good or bad sign? That inflation has now dropped to a 3-year low, giving the US central bank confidence that it has slowed the economy down enough already. Okay, so is this a good or bad sign? Is this a good or bad sign, guys? That inflation has now dropped back to 2%? Good or bad? Can you type G or B? Like smiley face or bad? It's actually a good sign, okay? It's a good sign. It means, right, that the policies previously in increasing the interest rates has taken effect. They wanted to slow down the economy. They wanted to slow down inflation, right? They wanted to take a pause. And therefore now, with inflation dropping, it gives them, it gives the central bank confidence that, okay, economy has now slowed down to a point where we have targeted previously. but maybe even too much now. Why? Because the job market is starting to show unemployment rates at all-time highs ever since the past 3 years, right? So alarm bells. Now, when interest, and therefore, do you think that this points to interest rates being cut in the near term, or do you think interest rates will continue to stay stagnant or increase in the near term? Decrease, or do you think do you think that there's a likelihood of interest rates being cut, or do you think there's a likelihood of continuous increase in interest rates? Decrease or increase? D or I, guys? D or I? Impending, meaning we're waiting. Do you think that these two data, unemployment rate rising, interest rates fall, inflation falling back to 2%, do you think this points to a good sign of Fed cutting interest rates or increasing? Okay, very good. Anup says decrease, Andy says good sign, but Fed didn't decrease. Yeah, haven't, right? Haven't. So it is definitely coming. Okay. Oh, okay. Use let me close the banner. Okay. Indeed, okay, data points that there is indeed a likely interest rate cut in the near term. In the near term, because do you think unemployment rates can continue to go up? No. Okay, this is really a significant alarm bells already. So how does this impact the market? This impacts the market through bond because to higher, I mean, when there is higher interest rates, money flows to the bond yields, okay, the bond market. But when interest rates start to taper, money flows back into the stock market. So there is a potential that when interest rates are being cut, money will eventually flow back into the stock market. Not only that, okay, when interest rates are being cut, tech companies lower the cost of debt. They're able to take more debt up to expand their companies, right? So then there is a growth in the tech sector. Not only that, interest rates fall, right? And then now inflation is also decreasing. Spending power increases. Spending power increases in terms of the consumers, and this is where it starts to run the economy. It spurs the consumer industry. Although, right, it's a balancing act because on one hand now unemployment has already risen. Okay, so this is also something to take note of. All right, but what does it point to? It points to a positive sign, a likely positive sign in terms of the interest rates. Having said that, pulling it out into the bigger picture, the market is still strongly overvalued. All right. Now, many of you are asking, how will the upcoming elections impact the stock market? Okay. For the sake of time, guys, I think I will save this for another. I will save this for another webinar. Okay. The concerning the elections. Okay, you guys can, the form that I put in just now, where is it? Okay, the form link that I put in just now, if you all want to find out, okay, and attend this other workshop that I'm going to conduct 2 weeks from now, this is the link. I've put it in the chat. Okay, I will cover the impact of the upcoming elections. Okay, but what we know is that we can expect further volatility. Why? Because historically, there is what we call the September effect, and you guys can go and read up on it. Okay. Historically, September, October, lower market returns. There's volatility, there is drawdown. So can we expect that? Sure, we can. And then the question is there a possibility of a deeper correction? Guys, yes or no? Is there a possibility of a deeper correction? Yes or no? Is there a possibility of a deeper correction? Yes or no? Yeah, impending war risk in Middle East, and then that will affect all the supply chain, correct? And not just supply chain, but also demand globally, correct, William? Okay, Andy says yes. Gareth says yes. Okay, do you all think impending? Yeah, Danny says yes. Vincent says yes. Vincent says yes. Kathleen says yes. Okay, now, indeed, okay. Now look, absolutely. No one can time the market. No one can time the market. It is very, very... Now, let's recap what are some of the indicators, right? Which shows that potentially there could be a deeper correction. Let's recap our learning. Number one, can you type it in the chat? What have we said points to a possibility of deeper correction? Number one, it is the significantly overvalued Buffett indicator, right? The market is still significantly overvalued. Number two, what is it? Number two is that overall revenues of the S&P 500 companies, right, have slowed down. The growth has slowed down, right? Number 3, what else? We talked about the upcoming September-October effect. Typically, historically, there is always, like lower market returns during these 2 months. Having said that, on the other hand, right, on the other hand, is, not everything is doom and gloom, because profitability has increased, right, in the S&P 500 companies. And what else? Also, I hope that you guys are taking notes, huh? And also what? And for those of you guys, you want the slides, like and share this, okay? For those of you guys who have joined late. And number 2, what else is positive is that there is a likely interest rates cut that is coming up, okay? So at the end of the day, is there a possibility of a deeper correction? Absolutely. No one can time the market. But the question is, number 1, how do you cut through the market noise? Doesn't matter whether market goes up, doesn't matter market goes down. You can cut through the market noise. You exactly know how to identify opportunities that are right for you. Opportunities are tons, okay, out there. But what is right for you, it all depends. Number 2, you know exactly how to take advantage of them, okay? So before I move on to the market opportunities and where investors should be looking at this point in time, which also makes, which is also the whole point why we are here, right? I want to make some exciting announcements, which I was telling you just now, okay? Some exciting announcements. If you want to know what it is, type me. Can you type me in the chat? Exciting announcements, type me, okay? Before we move on to what opportunities investors should be looking out there, okay, some announcements. If you want to know, type me, guys. If you guys want to know what is this exciting announcements, okay, putting everything into context in terms of the market, in terms of the movement from here. Okay, good. Now, I am going to be conducting, once again, free workshop. Okay, free workshop. I'm going to, this is for those of you guys. Now, let me just paste it once again here. The sign up form is here, okay? Now, once again, this is for people who want to supercharge your ROI. How? By consistently making money, whether the market goes up or down. It is very important. Too many people are trying to stack the bricks of your house, lay the cement before you get the blueprint of the house. What I'm going to teach in this webinar itself is to teach every single one of you how to get your customized portfolio strategy, which is your customized game plan that is weatherproof, that is suited for your different risk profile, because every single one of you have different risk profile. Okay, I can tell you, very, very different risk appetite. Number 2, I'm tailoring it to your life stage, right? Someone who is a young working adult as compared to someone who is in a retirement stage, someone with young family, your portfolio objectives and the way you craft your portfolio, very different. Number 3, okay? I will teach you how to craft your portfolio strategy based on your portfolio objectives. There are different objectives. Number 4, also based on your strengths and weaknesses, all right? So if you have this customized portfolio strategy, okay, you will be able to cut through the market noise, whether it goes up, whether it goes down. You will be able to identify which opportunities are for you and how exactly to take advantage of them. Because I can tell you what is an opportunity to me might not be the right opportunity for you, just because we have the different risk appetite, different life stage, different portfolio strategy, okay? Yes, exactly, Clarence. I will be sharing it. Okay, I will be sharing it in the coming segment. So just stay tuned with me. One more minute. Okay, so guys, I will be giving you an analysis, a further analysis of the outlook of the upcoming S&P 500, especially with the elections. Okay, with the elections, how to supercharge your portfolio. I'll be teaching you guys the exact 5-step system that I use that has costed me more than 80K of learnings in the market. Actual, to supercharge my current 6-figure portfolio, and exactly what I do to sustain my returns. And then number 3, it's the customized portfolio strategy, which I was talking to you about, tailored to your risk appetite, life stage, portfolio goals, strengths, and weaknesses. So regardless, new or seasoned investors, this workshop is for you guys, completely free. If you want to take advantage of it, okay, you can sign up over here. All right, you can sign up over here. Okay, good. First come, first serve. By the way, limited slots. If you want, sign up. Not for people who want to chase after the next shiny thing. Okay, it's for people who really, really want to make money in all seasons. Okay, good. Now, on to Clarence's question. Where are the opportunities? Where are the opportunities? Very importantly, before I share with you, Warren Buffett says risk comes from not knowing what you're doing. Okay, so at any one point in time, I can tell you, Whether market goes up, market goes down, you'll be sleeping very peacefully. You will still be profiting if you have your customized portfolio strategy, which is why I'm conducting the upcoming workshop 2 weeks from now. Next thing, when you know what you are doing, that's how you take advantage of the market. Let me ask you, which industries do you think are going to benefit from this current market cycle? Guys, can you type in some thoughts? Which do you think are the industries that are standing to benefit from all these upcoming impending changes or movements in the market? Okay, we talked about, what did we talk about? We talked about the overvaluation, we talked about interest rates, we talked about inflation, we talked about PMI, my goodness, we talked about unemployment rates, right? All this. Like, what do you think? Okay, Clarence says small caps, but please, small caps are very dangerous. What else? You don't necessarily need small caps. And this says metals. Anything else, guys? Why? Why? Type it, guys. You're here for opportunities, right? You're here to make money, right? You're here to make money, correct? Guys, think about it. Think about it, huh? What do you think? Just look at the market trends, okay? Just look at the market trends. Very interesting. Okay, so anyway, not to hold you all further, all right? Utilities is one sector. Why? Because nowadays, there's all this AI, right? I mean, we are moving into the era of AI, chatbots, a lot of cloud infrastructure, public cloud, right? We are moving into all these very, very tech-based sort of solutions, and every company that doesn't embark on this will ultimately be ousted. All these data centers, all these tech infrastructures need utility to be powered on. Okay, so more than ever before, utilities is going to be needed. I'm just talking about this in terms of broad strokes. Okay. Right now, though, when we look at the PE ratio, it's still a little bit overvalued, but it just means that you have to go down into this segment and find companies that are still undervalued. Are there? For sure, there is. But very importantly, you also have to ask yourself, what is within your customized portfolio strategy? What kind of risk can you take? What is your portfolio objective? Is it growth? Is it income? Your life stage, okay? So on and so forth before you deep dive. Now, second, just now you all were talking about industrial materials, energy, right? This is another one, okay? And it shows that, this is showing that it's growing, right? Once again, ongoing transitions into electrical energy, right? All these infrastructures for climate changes. We're also talking about data centers that are powering the AI chips, building it, maintaining it, all these data centers, right? AI chips, the reason why NVIDIA has shot to the moon, all these AI chips, production of AI chips are still needed, right? In order for machine learning, in order for all this, in order for all this new tech to be empowered. Okay, so there are literally all these semiconductors and chips that are still needing to be produced. So overall, this is a sector that is also going to be growing from here. Now, tech, guys, I can tell you, how many of you are invested in tech? Can you all type in one company that you all are invested in? Okay, type in one company that you are invested in. Recently, and let me share with you guys, okay, you guys can go and look at this company, Microsoft. This is one company out of the few companies that I took advantage of recently in this sell-off. Spectacular company. For those of you who want the reports, you can also subscribe to my newsletters, okay, my email newsletters. I will share with you the exact stock report on this company. Super solid. It was undervalued by more than 30%. Okay, it is still not too late to take some action on it right now if it matches your portfolio strategy. Once again, your customized portfolio strategy. And so if you guys want this stock report, you can subscribe to the link below. Okay, it's the Beehive, Winning with Felicia .beehive. The link is running below. Now, I must caveat, not every company has a good valuation right now. I invested in a couple last week. Microsoft is one of them. Absolutely solid. Very, very good valuation as well. And also there are a couple of turnaround opportunities, okay? come for the workshop that I was telling you guys about. I will also talk about a possible turnaround opportunities. The thing is, people like to talk about the sexy stuff, right? Oh, your Nvidia, your what are the most recent tech stocks? There are tech stocks that are like sleeping giants and potentially sleeping giants. All right, it's what we call potential turnaround stocks. I will cover some of these opportunities as well in this upcoming workshop 2 weeks from now. Sign up link is in the chat. What I want to say and caution everybody is that tech, there was a correction. There are great opportunities out there. Having said that, companies like Nvidia are still way overvalued more than it should be. Okay, but if you want to invest in your first tranche, you could, depending on your risk appetite. Okay, depending on your risk appetite. So, how do you sleep soundly in this market condition? Very important. Number one, building your conviction, right? I will talk about that in another webinar because I don't want to hold you up. Number two, having a customized portfolio strategy with proper entry exit rules. Many people know how to enter, or actually many people don't even know how to enter. You're just like throwing in, your baskets, throwing your eggs in one basket at one go. Recently I've had a couple of calls with my mentees, and when I really drill down with them, okay, tranche one, tranche two, or tranche three, depending on their portfolio strategy on how many tranches, and starting to put to test their rules, then we realize, this person's risk appetite is actually not as high as he or she has initially stated, okay? And then 90% of investors enter but don't know how to exit. Guys, if you don't know how to exit, you cannot make money. Yes, you can leave it there for long, but will there be opportunity cost? For sure. Only when you exit do you have additional capital to be pumping into even better opportunities, okay? And always remember, it never harms to take profits, okay? It never harms to take profits. This is also what I coach my mentees on, testing their exit rules. When people are married to their position, right, or stuck into their position, don't dare to cut. Wow, if it's 100, I had this mentee, more than 100% ROI already, still don't want to cut the position. I'm like, hey, never harms to take profits. Just you could potentially exit a portion of your position. Good thing, exited, right? Why? Because immediately Thursday, boom, the drop happened. Okay, so very important, customize portfolio strategy with proper entry exit rules. If you don't have, come for the workshop 2 weeks from now. Link is in the chat. Okay, and then number three, remember position size while remaining vested. Your position size will also be informed by your customized portfolio strategy. So based on your risk profile and everything, okay, your life stage portfolio goals, you will know how many positions you should have and how much each position should have. Over-indexing or under-indexing is no good, because if you under-index on a certain position, your money is not working for you. Even if it doubles or triples, doesn't shift a needle in your portfolio. If you over-index, if there is a heavy market correction, your money is stuck in that position. You cannot be putting it into other better opportunities, okay? So this is what I cover with my mentees, guys, and this is just very, very important because, I've been conducting, especially now with this market volatility, I've had so many calls in a past week, but it's really, really good because I see many people, taking opportunities where they should be, firing in the market where that should be. Once again, if you don't have your customized portfolio strategy, I will see you in a workshop. The link is in the chat. Okay, the link is in the chat. Okay, guys. Now, can you type one key learning from today? Type one key learning. Okay, before you go, type one key learning, and then I want to give you some resources to continue helping you all grow. Okay, so email subscriptions. While you guys are typing your one key learning, there are 4 different ways in which you can connect with me. Email subscriptions. I write exclusive reports and analysis for free. Okay, business updates. winningwithfelicia.beehive.com. Just screenshot this entire screen if you all need to. Telegram, okay, is where I do, these are the people on my Telegram. People on my Telegram basically are the first to receive any content, any insights, any updates, any polls, any announcements. Okay, so if you're not already on my Telegram, go to my Telegram. The link is over here, http. So it's t.me. So t.me/fortunefeng. Okay. And then Facebook page, which this is where Facebook Lives are happening, all right? But I don't make announcements as frequently or update the insights and content as frequently on Facebook. So for you guys, you really want to keep most up to date, follow my Telegram. And then I also have YouTube, okay? So two very important ones, email subscription and Telegram. And both have very, very different insights, okay? The more meaty insights are always in the emails. So you can subscribe to my email. Also to receive the stock report on the company that I have invested in just last week, all right? So with this, guys, can you type one learning in the chat? Type one learning in the chat that y'all have gotten away from today. We have covered so much, okay? Maybe just to recap, Just to recap, what did we do today? Okay, we talked about what has caused the sell-off, okay? 4 different factors. We talked about the job data, the jobs market. We talked about whether there are further headwinds in the near future. Talk about the positives, the negatives, okay? We talk about how expensive is the current market and if there is still room for correction, right? We talk about Buffett Indicator, the PE, right? We talk about PMI, what it stands for. We talk about interest rates. We talk about what this means for the market. Okay, elections we will cover in the other workshop 2 weeks from now. And then we covered upcoming volatility. Is there a possibility of deeper correction? Okay, we covered where are the opportunities in the various sectors. Okay, but no time right now to deep dive into specific companies. We can do that in further sessions. And that is why, okay, having a customized portfolio strategy, very, very important because it informs how to position size. Not only that, it informs you how to enter and exit. Okay. And in order to keep up with all the learnings, because there's just so much, as you can tell, right? 1 hour is over. I haven't even talked through. I still have more to go. Okay, so to receive my most recent stock report for free on a company that is still worth investing in, if it matches your customized portfolio strategy, subscribe to my emails, my newsletters. Okay, for the most updated content, insights, polls, news, okay, announcements, sign up to my Telegram. All right. So guys, did y'all learn? If you learned today, can you type one learning from today? I just want to give some time to everybody. I'll wait here for 2 to 3 minutes. Type in one learning. And for those of you who want to get the slides from today, help to like and share this video. And when you share, put it to public mode. And I can see that you have shared, and then I will send you the slides from today because there's a lot to digest today. Okay, so do that. And then for those of you, okay, so screenshot this. Guys, have you screenshot this? If you screenshot this, then this, okay? So what I will be covering during this workshop 2 weeks from now, 4 things. Number 1, view on the S&P 500, the market moving from here, including the upcoming elections, right? Very important. This is a very key milestone and event. What's going to happen, how do we position? Number 2, I'm going to share with you the exact 5-step system in which I've used to grow my portfolio to a 6-figure portfolio, sustainably returning sustainably having growth in my returns. And these learnings have costed me more than 80K. Okay, so it's very, very important. Over 13 over years of investing. This is really a proven system. Okay. And then number 3, it's your customized portfolio strategy tailored to your risk appetite, your portfolio goals, your life stage, your strengths and weaknesses. You need this to cut through the noise, regardless of the market condition. Okay. So I will see you all here. And then type in one learning, please. Type in one learning in the chat, guys. Okay, very good. Sell kidney buy. Okay, Anud says overvalued. Sell kidney by Microsoft. Okay, Anud, I will check on the newsletter. Market overvalued. Yes. BI, you have learned on the sector. Yeah. BI and current market valuation. Very good. Anyone else? What is one learning today? What is one learning today? Okay, I see you guys. We're actually keying in just now, but it was lagging just now. What is, yeah, very good. Don't time the market. Always stay invested. How do you stay invested? When you have a customized portfolio strategy. How do you have a customized portfolio strategy? Attend the workshop 2 weeks from now. Because, okay, a lot to cover. All right. Anything else? Very good, guys. Keep the learnings coming. Anything else? Anything else? Anything else? Guys, anything else? Any other learnings? Oops, any other learnings? And for those of you who want to stay connected, okay, you can click the email subscription. Maybe let me just put it in the chat. Email subscription, or you can screenshot this, okay? Email subscription. You guys can join my Telegram. Yeah, for all the first-hand updates. Can you all key in? What other learnings do you all have? What other learnings have you all gotten from today? What other learnings have you all gotten from today? Can you all type in the chat? Yeah, okay, market cycle, yes. Anything else? Anything else? Anything else? Okay, there is. Guys, any other learnings? Can you all type it? What else caught your attention from today? What else caught your attention from today? Take profit, have a strategy. Very good. Okay. Yeah. Anything else? Oops. Anything else, guys? Okay, so in the chat. Okay. I think it's just very laggy, right? Anything else, guys? What else have you all learned? So Helen says, take profit, have a strategy. Anything else? Guys, second level of learning, first level of learning is just information consumption. You're just sitting there to listen, doesn't make a difference. Second level of learning is when you ask, so what? Okay, what is the reflection? Third level of learning is, how do I apply this to my own investing? So I'm trying to move you all up the ladder in terms of your level of learning, all right? I know you guys might be a little bit uncomfortable. It's like, what, Wednesday night? For those of you in Asian time zone, right, it's already 10 plus p.m. But before you go to bed today, let's recap, just so that the past hour you haven't wasted your time, right? What is one learning? What is one learning that you've gotten from today? So we covered what has led to this sell-off, right? We have covered the upcoming market directions. We have covered the areas of opportunities, right? Anything else? Okay, Alan says CPS. Very good, very good. This is actually really the key. Okay, you have a strategy, you can profit. No strategy, even the market conditions are very good. Also, also difficult. Okay, fantastic, Alan. Okay, good. So guys, I wish you a splendid night ahead, a splendid day ahead for those of you in another time zone. I'll catch you all 2 weeks from now. Okay, very good. Yeah, I know. So I'll catch you all 2 weeks from now for those of you who are seeing me in the free workshop. Okay, super exciting, a lot to be covered. And then for those of you, I will stay connected with you all on Instagram, okay, on my email list. And wish you all a good day ahead. Please invest safely, okay? Invest safely. And then I look forward to hearing y'all in terms of some of the trades that y'all have made in the next Facebook Live. Fantastic, everybody. And then those of you who have liked and shared, you can await the PowerPoint slides. Okay, fantastic. Remember to put it on public. Take care, guys. Thanks for joining. Kudos. Very, 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 very good. Thumbs up. Okay, fantastic. Goodbye.